Okay, let's now move to the next chapter. We are kind of done with so in your syllabus, what happened is the first was the cost sheet and intro. In cost sheet, we learned about different categories of cost. We have discussed all the categories. Material was the first category, which is chapter 2. Labor was second category, which is in your chapter 3, labor and expenses. And chapter 4 and 5 focused on overheads. Now we are going to learn about how do we account for these expenses. That is, how do we pass journal entries, how do we prepare ledger. There's no concept of something called as P&L balance sheet and all, but how do you account for these transactions is what you're going to learn in chapter 7, which is cost accounting system. In cost accounting system, we're going to learn about how do we account for this. The initial part, I'm going to spend time on giving some notes which is specifically on journal entry. What is on journal entry, you'll understand, and then we start doing the questions. Now, when we are maintaining accounting records, when you maintain your financial accounting records, objective is to record all transactions, prepare ledger, get a trial balance, and ultimately get to know what is the profit or loss of a company. Also get to know what are the assets and liabilities there in a company. That is what financial accounting does. Cost accounting is least bothered about your balance sheet scenario. They are not looking at finding out whether you have so much receivables, so much payable, so much cash. All that is not the focus of cost accounting. For that, we have financial accounting, which is separate. Cost accounting focuses to just get the cost of a product or service. It is not going to do anything beyond that. Cost accounting focus is only in calculating the cost of a product or a service. Indirectly, you'll have to prepare a cost sheet. They are looking at preparing a cost sheet. That is what you need to do. In order to prepare a cost sheet, we'll have to first record all transactions, prepare a ledger, get something called as a trial balance. Now, there are two methods of maintaining cost accounting records. One is called integrated system and another one is called non-integrated system. You need not write any notes. I'll give you notes later on. What is integrated and non-integrated? Here, one system in which costing and financial accounting is maintained together. So you will maintain them together in such a manner that it gives you the cost of a product or a service. It also gives you the P&L account and balance sheet. It gives you P&L and balance sheet. It also gives you the cost of a product or service. Both you kind of get it in this method. Both the aspect you get it. So integrated method is combining costing and financial together. We are not going to see much of this while we solve problem, because integrated means you are maintaining it together, more like your financial accounting. We'll have some problems on this also. Non-integrated means costing is separate and financial accounting is separate. Financial accounting, whatever you learn in your financial accounting, you follow that. Costing, you'll have to maintain separate records. Costing is separate records. When we are maintaining separate records for costing, costing books will show some profit. Financial books will also show some profit. Like you have a bank passbook and a bank cash book where a bank reconciliation is done. Similarly, costing books will show profit. Financial books will show a different profit. So there could be a need for doing something called as reconciliation. In costing, we do not record certain items. In financial accounting also, we do not record certain items like notional. In costing, you can record rent for own building, whereas in financial accounting, we are not going to record those items. In costing, we ignore dividends paid. In financial accounting, we consider dividends paid. In costing, we ignore taxes, income tax paid. In financial accounting, we consider that in your P&L. So there are items which are different. So there will be need for doing reconciliation. So in this chapter, first we will learn how to maintain non-integrated books and integrated books. Primary focus will be on journal entries. Based on journal, we'll prepare ledger in few scenario and a trial balance nothing beyond trial balance. The ledger is technically like a cost sheet. The ledger which you are going to prepare is technically like a cost sheet. Instead of preparing a ledger, organization can go for cost sheet preparation also, which is what you have been doing in every chapter till now. Wherever cost sheet was needed, we have done cost sheet. That is nothing but cost system or cost statement maintained under non-integrated system. It's technically a statement maintained under non-integrated system. So initially what we are going to learn is the different journal entries which are there under integrated system and non-integrated system. So we have technically so many journal entries. So I'm going to explain all these journal entries. We are going to write all these journal entries. Around some 20-25 journal entries are going to be there. Once you are done with this 20-25 journal entries, we'll then start doing problems on those. So now write, give the heading chapter 7, cost accounting system. Journal entries are methods of maintaining costing records. Methods of maintaining costing records. Methods of maintaining costing records. Integrated system. Integrated system. Costing and financial records. Costing and financial records. Costing and financial records are integrated. Costing and financial records are integrated and maintained using single set of books. Using single set of books. Plus there will be no need for reconciliation. No need for reconciliation of profits. No need for reconciliation of profits. Clear? That's your integrated system. Non-integrated system. Non-integrated system. Costing records are maintained separately and this will lead to need for reconciliation. There will be a need for doing reconciliation. Need for reconciliation because costing is maintained separately, financials are maintained separately. This is going to lead to a need for doing reconciliation of the profits. You will have to reconcile the profits. Journal entries under non-integrated system. What will happen under integrated? I'll explain. Journal entries under non-integrated. Two columns. The first column is to write the narration. The second column is to write the journal entry. So accordingly manage space. First column is for the narration. The second column is for the journal entry. Entries relating to raw material. entries relating to raw material, relating to raw material. Just give me a minute. Okay. Entries relating to raw material, that's the main heading. First we will see, I'll go in the order of your cost sheet. First item is direct material, so I'm first will give the journal entry related to raw material. So the first transaction which can happen is purchase of raw material, purchase of raw material, purchase of raw material. When you buy a raw material, what is the journal entry you pass in financial accounting? Purchases account debit to bank or creditors if you have made the payment or not made the payment. So purchases is not the term we use here. You have purchased raw material. So we debit this to an account called stores ledger control account or raw material control account. This is not a nominal account. This is a real account. Or technically, this is an asset. What is stores ledger control account is, it is an asset which will increase if you are buying raw material, or if raw material is increasing, stores ledger value will go up, and if raw material is going down, stores ledger value will go down. So if you have issued raw material, debit stores ledger control account. Wait, to cash slash creditors, non-integrated system does not want to know how much is the cash balance, how much is the bank balance, how much is the creditors balance. All that is not there. So in non-integrated system, we have limited set of accounts we open. So I do not have an account called bank account or creditors account. Wherever you do not have an account, for example, somebody will say the journal entries bank account debit to sales account. Sales is a ledger which is maintained, but bank is a ledger we don't maintain. So wherever that ledger is not maintained, we call it as general ledger adjustment account or cost ledger adjustment account. It is basically like a suspense account. It's like a suspense account done only for the purpose of doing double entry posting. See, what costing wants to know is how much raw material is there. That you can understand by looking at your raw material control account, but doesn't want to know how much bank balance is there. It doesn't want to know how much creditors is payable. It doesn't want to know that information. So the journal entry, right, stores ledger control account debit to general ledger adjustment account, to general ledger adjustment account, stores ledger control account to GL adjustment account. The stores ledger control account will tell you how much raw material is there in the company, how much raw material is there in the company. That is going to come through your stores ledger control account. Other name is raw material. Some places ICI uses SLC account, some places they use the term raw material control account. So this account will tell us how much raw material is there in the company. General ledger adjustment account is done only for the purpose of double entry posting. So if you see, the explanation says cost ledger control account, this is also known as GL adjustment account. This account is used to complete double entry posting, because you cannot write a journal entry without having two sides. So we will be preparing a trial balance. In the trial balance, you will have this account called GL adjustment account, which is like a suspense account. It has no utility, no value, but this account will be there. This account will be there. Stores ledger account will be debited if raw material is increasing, will be credited if raw material is going down. Next, return of our purchase returns. Purchase returns, reverse the entry. General ledger adjustment account. General ledger adjustment account. Debit to stores ledger control account. Purchase returns. Okay. Now we'll also follow integrated system in some places. When you follow integrated, it's the same entry, the same entry. The word GL adjustment will not come there. What will come then? To bank, to creditors, to cash, whatever is the account which is logical, you please put that account. So you'll have to imagine your financial accounting entry and then replace that GL adjustment, then replace the GL adjustment. So if it's bank account, add bank account in the entry. For example, there was one question which was asked in non-integrated system: money collected from customer, money collected from customer, tell me the journal entry for this. Cash account debit to debtors account. This entry itself will not be recorded in non-integrated because cash will be replaced as GL adjustment, debtors will be replaced as GL adjustment. So I don't want to write an entry called GL adjustment to GL adjustment. So collecting money from customer is not the worry of costing. It is not the worry of costing. If you have collected money from your customer, or if you have made payment to suppliers, such journal entries will not come in non-integrated. Wherever it will come in integrated, obviously it will come in integrated. Wherever in non-integrated you have GL adjustment, you will have to replace that with whatever is the account, whatever is the account. Next, issue of raw material to production, issue of raw material to production. There is no journal entry passed for this transaction under your financial accounting. Till now in financial accounting you would never have come across some term like issuing the raw material to the production. We are not bothered about, because what you do in financial accounting is record the opening raw material, record the purchase, record the closing, everything else is auto recorded. That's what financial accounting does. If you are issuing raw material to production, will raw material value go down or go up? If raw material is going down, you'll have to credit SLC account. You'll have to credit SLC account. Stores ledger control account is going to be credited because raw material value is going down. So the entry is work in progress control account debit. Write the entry, I'll explain. Work in progress control account debit to stores ledger control account. Work in progress control account debit to stores ledger control account. WIP control account debit to stores ledger control account. What we have done is we have increased the WIP value. WIP is also an asset. We have increased the WIP value and reduced the raw material value. In short, raw material has become WIP. At some stage, we'll pass an entry called FG control to WIP, which means WIP has become FG, and at some stage FG will become sales. FG will become sales. So we are going to pass entry which will, now what would have happened is in your ledger opening raw material would have been there. There's a purchase which is recorded in the debit side, there is a purchase return which is recorded in the credit side, and there is a issue of raw material which is recorded in the credit side. Technically the closing balance will come. Technically the closing balance will come. There are a lot of other transactions, but we are trying to calculate the opening raw material value and the closing raw material value. Next, return of raw material from production. Reverse the entry. Stores ledger control account debit, WIP control account. You issued the raw material to the production team. They said we don't need it, we are returning it back. The production department is saying we don't need the raw material, we are returning it back to you. So if there is a return which is happening from the production, we're going to pass this entry SLC account debit to WIP control account. What will happen? Raw material value will go up, WIP value will go down. Normal loss of raw material. Normal loss of raw material. Normal loss of raw material. Okay, one thing which is very clear is if there is a loss of raw material, SLC will be credited. Why are we crediting the SLC? Because raw material value will go down. Any normal loss of raw material is, or any normal loss will form part of cost per unit calculation. Any normal loss is treated as overhead. Any abnormal losses directly goes to costing P&L. So normal losses, overhead factory overhead control account, FOH control account debit to stores ledger control account. FOH control account debit, factory overhead control account debit to stores ledger control account to SLC account. FOH control account debit to SLC account, stores ledger control account. Abnormal loss of material. See, opposite entry is gain. Okay, if at all gain happens, that's opposite entry. I'm not giving an entry for that. Same entry, but it will go to costing P&L. Abnormal loss will go to costing P&L account. Costing P&L account debit to stores ledger control account. Wherever you do not see the term GL adjustment, then the entry is same for non-integrated and integrated. So all these entries are same whether you follow non-integrated method or integrated method. One alone changes. We don't use the word costing P&L, we use the word P&L there, because there it is integrated, both are combined together. So you use the term P&L rather than using the term costing P&L. Any doubts on this? Issue of raw material for maintenance. Issue of raw material for maintenance. Okay, now let me first explain this. You purchase the raw material for the purpose of production. The purpose is to produce out of it, but suddenly you say no, you want to use it for some other purpose. In financial accounting, you may record an entry for this or you may ignore it also. Technically, the entry is purchase which you do has to be reversed now. The journal entry, if you issue any raw material for some other purpose, for example, you purchase the raw material and the proprietor withdrew it for its personal purpose, a journal entry which is passed there is drawings account debit to purchases account. We are reversing the purchase and calling it as drawings. Our maintenance account debit to purchases account, same entry will come here. If you have issued the material for some other purpose, one SLC will be credited. SLC will be credited because raw material is going down. Just keep in mind whether raw material will increase or raw material will go down. If raw material is going down, credited. If raw material is going up, debited. So SLC has to be credited. The maintenance could be a factory maintenance, then it's called FOH control. It could be an administrative maintenance, then it is called AOH control. And it could be a sales maintenance, then it is called as a selling overhead control. It can go to any control account. So FOH slash AOH slash SOH control account. Normally it will go to factory overhead. Normally it will go to factory overhead because it will be a factory maintenance. To stores ledger control account. To stores ledger control account. Any increase in raw material has to be debited. Any decrease in raw material has to be credited. Transfer of raw material from one job to another job. Transfer of raw material from one job to another job. Now what organization did is they issued the raw material to production. Moment you issue the raw material to production, the raw material is in the godown. It is part of SLC account. From godown, if you remove and put it in the manufacturing plant. It is part of WIP control. It is part of WIP control. Many a times what can happen is you issued the raw material for job 1. From job 1 you want to now shift it to job 2. Technically the journal entry for this is job 1 account, which are job 2 account where this expense is to be recorded, to job 1 account. So indirectly it is transferred from one WIP control account to another WIP control. Journal entry for this is technically WIP control account debit to WIP control account, which I cannot record. When you're transferring from, some question can say transfer from one godown to another godown. The journal entry for that is SLC account debit to SLC account. How do I record that? Whether the raw material is stored in godown 1 or godown 2 or godown 3 doesn't really matter. It is a raw material. Whether it is in manufacturing job 1 or job 2 or job 3 doesn't matter. It is a WIP control. So for this, no entry. No entry. Practical one, an entry would be passed for this, which is called within the WIP control account they'll prepare 100 WIP accounts called as job 1, job 2, job 3, job 4. We are not going to do all that. Within a WIP control account itself, 100 different WIP control accounts can be prepared by an organization. So they will debit one WIP control and credit another WIP control. For us it does not matter. Any doubts on this? This is related to raw material. Let me check if any other entry is there. I think all would get covered related to raw material. Purchase of raw material, return of material, material issued to production, maintenance, return. Okay, there's one more entry. Purchases for special job. Purchases for special job. Okay, now listen. What normally happens is vendor gives the raw material to stores. Stores gives the raw material to production. When vendor gives the raw material to stores, we pass an entry called SLC account debit to CLC account, cost ledger control account. When stores gives it to the production, we pass an entry called WIP to SLC. Can you combine these two journal entries and tell me a single journal entry? SLC to CLC, WIP to SLC. What can be a single journal entry if you combine them? WIP account debit to CLC. Very rare scenario, the vendor will directly give it to the production. It's a rare scenario, but sometimes it can happen that you tell the vendor it is for a special job, you directly give it to the job, don't give it to the stores. In that case, the entry is WIP to CLC directly. WIP account debit to cost ledger control account. Directly you pass an entry. This is also purchase only. But what is the point of giving it to the stores and then giving it to the production? You're not doing the twin entry. You're not doing the two-side entry. You're directly giving it to the production premises. So a direct journal entry is passed. A direct journal entry is passed. Assuming every organization does this directly, then the stores will not come. I need not pass the entry for SLC account. Directly I'll record it in WIP account. But in practical world, it will go to stores. From stores only it will go to production. Some rare scenario, direct purchase may happen. So the entry for this is WIP control account debit to general ledger adjustment account. General ledger adjustment or cost ledger control, whatever name you give, that's okay. To GL adjustment account. WIP control account debit to GL adjustment account. Clear? I'll wait for a minute. You go through all entries relating to raw material. Let me know if there are doubts. Then I will go to direct labor. This is related to raw material. Clear? Okay, I'll move to next. Entries relating to direct labor. Entries relating to direct labor. Relating to direct labor. Okay, now coming to the direct labor part. On the direct labor, first will be paying the workers. So payment of wages. Payment of wages. What's a normal entry you pass in financial accounting? Wages control account debit. There it's called wages account. Here it's called wages control. To bank. Bank is not there, so it will become to GL adjustment account. GL adjustment account. Wages control account debit to GL adjustment account. Now in your wages, what we will do is here the wages which you pay will be analyzed as two things. One is called direct wages and second is called indirect wages. Direct wages forms part of WIP cost. Direct wages will form part of the WIP cost, and any indirect wages is treated as a factory overhead. Factory overhead. See what we are trying to do in this is, when you prepare your cost sheet, you write direct material. The direct material is this column. Technically, this is the direct material value. This is the direct material value. Though so many transactions will be there, but this is technically the direct material value. In the cost sheet, you need direct labor. You need direct labor. Next, analysis of wages into direct and indirect. Analysis of wages into direct and indirect. Wages into direct and indirect. So we'll have to now convert this wages, whatever you're paid, a part of it will be called as direct wages, which goes to WIP account, which goes to, why it goes to WIP account? Because the value of WIP will increase. Value of WIP will increase. At some stage, WIP will go to FG, FG will go to sales. So those will keep happening. So WIP control account debit, bracket direct wages, WIP control account debit, direct wages, WIP control account debit, direct wages, FOH control account debit, indirect wages, to wages control account, wages control account. See, you paid 1 lakh rupees wages, 40,000 is direct wages, 60,000 is indirect wages. Now, one rare scenario, you paid 1 lakh, 40,000 is direct wages, 50,000 is indirect wages, still 10,000 is left over. Still 10,000 is left over, which can be called as idle time. Which can be called as idle time. In that, I have normal idle time, which I have explained what we do in labor chapter. Normal idle time is either treated as part of wage cost itself or part of factory overhead, depending on the nature of the normal idle time. Abnormal idle time, if at all you have, it will go to costing P&L. It will go to costing P&L. Next, abnormal idle time. Abnormal idle time. Costing P&L account debit. Wages control account. Costing P&L account debit to wages control account. Objective is very simple. Moment you pass these entries, moment you pass this entry, wages control will have zero balance. Raw material will not have zero balance. The earlier account will not have zero balance because there will be a closing raw material. But once these entries are done, wages control has to have a zero balance. If it is not having a zero balance, then there is maybe extra idle time or some other challenge is there. You'll have to identify that and account it. So let me see if there is anything else. Payment of wages we have done, analysis of wages we have done, abnormal idle time we have done, costing P&L account debit to wages control. So direct material of cost sheet is completed, direct labor is completed. Next, entries relating to direct expenses. Example is royalty. Royalty is one of the example. Entries relating to direct expense. Incurrence of expense. Incurrence of expense. Okay, let's assume we have incurred a royalty expense. We have incurred a royalty expense. Moment you incur this royalty expense, I can pass an entry called direct, listen for some time, direct expense control account debit to GL adjustment account, because royalty is not maintained as an account. We call it as direct expense. From there, it will again go to WIP control. Because we do not have many direct expenses in the question, they say you directly do this entry rather than normally what you do, you route it through stores to production, or route it through wages to production, or route it through expense to production. They are saying no need to do this routing and all. Direct expenses not much is there. If at all you have directly recorded in WIP control account rather than routing it through a stores account or a wages account or an expense account. So if there is a expense which is incurred, which is a direct expense, the entry is WIP control account debit. Basically this entry, purchase for special job, it is like that. You're directly shifting it to WIP. You're directly shifting this to WIP rather than doing routing it through one account. We are not going to route it through an account, we'll directly shift it. Clear? Any doubts on this? This is relating to direct expense. So direct material done, direct labor done, direct expense done. We have reached the prime cost. We have reached the stage of prime cost. Next, entries relating to factory overhead. Entries relating to factory overhead. For factory overhead, let's assume you have paid factory rent. You have paid factory rent. Tell me what entry you pass if you have paid factory rent. Normal entry. Rent account debit to bank account. This rent is called factory overhead control now. It is called FOH control. So incurrence of amount. Incurrence of amount. Factory overhead control account debit. Factory overhead control account debit to factory overhead control account debit to GL adjustment account, general ledger adjustment account. Now till now if you look at direct material will have some closing balance. Direct labor is closed. Direct expense, we did not even open an account. Now we'll have to close the factory overhead account also. We'll have to close the factory overhead account. What will happen in factory overhead is you are incurring certain items which will be recorded in the debit side, which will be recorded in the debit side. Then you have to absorb this. We learned the concept of absorption when we were doing overheads chapter, that you will have to absorb the overheads to the product. Next, absorption of factory overhead. How can this be absorbed? The question can mention that it is rupees 5 per labor hour or 150% of wages. Some basis they'll give absorption of factory overhead. When you absorb this, again this will also shift to WIP. This will also shift to WIP. That is from, see what we did is from direct material you took an amount and gave it to WIP control. From direct wages you took an amount and gave it to, or from wages you gave an amount to WIP. Expense you have given it to WIP. This will also go to WIP. WIP control account debit. Factory overhead control account. WIP control account debit to factory overhead control account. Clear? Now what has happened is once you absorb this, you incurred 1 lakh in the debit side. You absorbed either more or less, which leads to under absorption or over absorption. How do you treat under absorption, over absorption? We learnt in that chapter where I said I'll explain why we use the term overhead control and all. The reason is it is clubbed under that account. So it can be supplementary recovery rate, it can be transferred to costing P and L. So whatever the question says, so I'm assuming it is going to costing P and L. Treatment of under absorption. I'm giving the entry for under absorption, opposite is over absorption. Treatment of under absorption. Any under absorption, if it happens, will go to the debit side of P and L. Will go to the debit side of P and L. So costing P and L account debit to factory overhead control account. Costing P and L account debit to FOH control account. Costing P and L account debit to FOH control account. Clear? It will go to factory overheads control account. You will debit your costing P and L and you're going to credit your factory overheads control account. If it's over absorption, you pass the opposite entry. Let me check if anything else is there. Recovery. Okay, under recovery part is done. Over recovery, I'm not giving the entry. Now what we have done, direct material done, direct labor done, direct expense done, factory overhead done, gross works cost. Then comes your WIP account where opening WIP will be there, closing WIP will be there, balancing figure is net works cost. Next, entries relating to WIP. Entries relating to WIP. Entries relating to WIP. For your work in progress, what we need to do is, in the manufacturing process, some of the units would have got completed. Then it is not called WIP. So first is completion of production. Completion of production. Completion of production. That is, an organization has completed the units. It's no more a WIP. It's no more a WIP. So it is now called FG. It is called FG. So FG will go up, WIP will go down. FG control account debit, WIP control account. FG control account debit to WIP control account. Clear? This is on completion of production. We are going to do FG control account debit to WIP control account. Clear? Next is shortage of WIP. What is shortage of WIPs? You did your books is showing WIP is 1 lakh rupees. You did physical verification, value is only 90,000. I'm giving for shortage, opposite is for excess. You did the checking, your books is showing value is 1 lakh. How books will show value of 1 lakh? In your books of accounts, 2 opening WIP is recorded, 2 direct material, 2 direct labor was there, direct expense was getting recorded, factory overhead was getting recorded. By FG control you were recording and you had a closing balance. Unfortunately, that is not matching the physical WIP. That is not matching the physical WIP, which can lead to shortage or excess. If you have a shortage, it is a loss. It is a loss. Costing P&L account debit to WIP control account. This is a loss which we have to face. Clear? Any doubts on this? So this is relating to your WIP, completion of production and shortage of WIP. After your WIP, what is the next stage which is going to happen is gross works cost, net works cost. We had those 5 line items. We don't bring all that in your accounting here. In that admin overhead part can come. Next is FG control. Next part is FG control. Entries relating to FG. Okay, now in your FG control account, there will be an opening balance. Something would have come from WIP. How will it come? Based on this entry. Something would have come from WIP and there is a closing balance. What you do is you sell units. You will be selling units. So recording cost of goods sold. Recording cost of goods sold. The separate entry called recording sales. I'll explain in some time. Recording cost of goods sold. That is, you have sold some of the units. Let's listen. You have sold units worth 80,000 for rupees 1 lakh. Units worth 80,000 for rupees 1 lakh. 1 lakh will be the sales entry, which is separate. This 80,000 will have to be subtracted from the FG value. 80,000 only have to be subtracted, not 1 lakh. You have sold goods worth 80,000 for 1 lakh rupee. 1 lakh is a sales entry which is separate. 80,000 alone has to be subtracted. Has to be subtracted from this value. So what we are going to do an entry is recording COGS, right? Recording COGS, write the entry. COGS account debit, or not COGS, we directly go to cost of sales account. I can go through COGS also, but we go directly to cost of sales. Cost of sales account debit to FG control account. There will be a separate entry. Okay, I'll write it parallelly itself so that you don't get confused. Next entry is recording sales. Listen for a minute. This entry is recorded at cost price. This entry is recorded at selling price. You record this at selling price. Listen, the entry is very simple. This is your normal entry. GL adjustment account debit to sales account. The difference between these two entries technically the gross profit. The difference between these two entries technically the gross profit. So recording cost of goods sold, which is recorded at the cost price. If they don't give you the cost price, then you cannot pass this entry. I need the cost price to pass this entry, because you cannot reduce the entire invoice price. You cannot reduce the entire invoice price. So cost price will be subtracted from your COGS and sales will be recorded at normal sales. You do only this in financial accounting. You do only this entry. In financial accounting, what you do is you record opening stock of raw material, sorry, opening stock of FG, closing stock of FG. Automatically the consumption is recorded. You don't try to do pass an entry like this, but costing will pass an entry like this. So two entries, one is at cost price, second is at selling price or the invoice price. Write this. And you can write a parallel entry which is for sales returns. When sales return happen, again two entries. One is to increase the FG balance and second is to reverse the sales. Complete this and then write the other entry. Reversing both the entries. Clear? I've recorded as sales. I've also recorded as sales return, but two journal entries. This will take care of the FG. Again, very rare scenario, there can be a shortage. If at all there, then the same entry. If shortage part is there, you're going to pass the same entry. I'm not getting into the shortage entry. Next, entries relating to administration overhead. Entries relating to administration overhead. I could have clubbed this earlier itself, but anyway, I'll explain it and then you do it. Entries relating to administration overhead. First is if you incur something. If you incur something, entry is very simple. AOH, control account, debit, GL, adjustment. Then you will have to absorb this administration overhead. That is, you will have to transfer this administration overhead to something. Listen, till now what has happened is direct metal was done, direct labor was done, direct expense was done, factory overhead was done, everything was sitting in WIP. From WIP shifted this to FG. From FG we have shifted this to technically COS, but it is also COGS. After that you have administrative overhead and selling overhead. This administrative overhead will get shifted. See, what is absorption is transferring from one account to another account. So you are going to transfer this to cost of sales account. You're going to transfer this to cost of sales account. Listen for some time. Administrative overhead is part of cost of sales of the company. Administrative overhead is part of cost of sales of the company. Factory overhead is part of gross works cost of the company, so it went to WIP. Factory overhead is part of gross works cost, so it went to WIP. Assuming a question says administrative overhead relating to production, administrative overhead relating to production, if it's relating to production, it forms part of COP, which is FG control. COP is FG control. See, basically imagine your cost sheet. In cost sheet, every problem you will have to be very clear on your cost sheet part. See, what we have done in this chapter is we have shifted this raw material, whatever you are incurring, to WIP account, which is gross works cost, to the WIP. Wages again to WIP. Direct expense directly in WIP control. Factory overheads shifted to WIP control. These 5 items will not be there in the question. If it is there, it will be shifted to FG control. It will be shifted to FG control. These 2 items will be shifted to cost of sales, and even what has happened is your WIP, which is this gross works cost or net works cost, from WIP you shifted this to FG. From FG you have shifted this to cost of sales. From FG we have shifted this to cost of sales. So this entry is administrative overhead will go to cost of sales. Wait for some time. This is for general overhead. It can also go to FG control account. It can also go to FG control account if it is AOH relating to production. See, ultimate objective is transfer everything and get cost of sales, which you are doing in a table form. Now we are not going to do it in table form. We are going to do it in account form. We are going to do this in account form. Table is easier to do, but we have to do it in an account form in the practical world. Basically, you have to keep recording every transaction. So listen for a minute. This I can call it as AOH slash SOH. If you incur, it is AOH control slash SOH control to GL adjustment. Absorption will go to cost of sales for selling overhead. For administrative overhead relating to production alone, it can go to FG control. To factory overhead control account to FOH will become AOH slash SOH control account. AOH slash SOH control account. And any under absorption you have, it will go to costing P&L. AOH slash SOH. Now what has happened with all this is your administrative overhead is closed, selling overhead is closed, factory overhead is closed. Only account which have balance till now is raw material control, because that is the closing raw material, WIP control because it has the closing WIP, and FG control because it has the closing FG, and cost of sales account will have a value. Cost of sales account will have a value, which is nothing but the cost of sales of the company, which is what a cost sheet will give you. A cost sheet is going to give you cost of sales. So if you imagine your COS account, if you imagine your COS account, your COS account will look like this. To FG control, this journal entry you had told me sometime back, or sometime back we have written this journal entry. Recording COGS, recording COGS to FG control account. This is technically COGS. Then to AOH control account to SOH control account. Total of these 3 in your normal cost sheet is called cost of sales. Total of these 3 in your normal cost sheet is cost of sales. So we are going to do this in an account form. 2FG control, which in bracket is called COGS. Then you have administrative overhead control and you have selling overhead control. You record this. When we do problems, you'll understand it better. Anyway, I'll summarize once everything is done. Record this now. AOH, SOH. Complete recording this first. Incurrence, absorption, and under absorption part. Clear? So we are almost done with the entries. Last set of entries relating to cost of sales and sales. Relating to cost of sales and sales. Okay. The cost of sales account, which you see here has a balance. What they say is transfer this to costing P and L. Transfer this to costing P and L. So this will go to the debit side of costing P and L. Sales entry. If you open a sales account, your entry would have been by GL adjustment. Transfer this also to costing P and L. This will go to the credit side of P and L. Sales will go to the credit side of P and L. Cost of sales will go to the debit side of P and L. Costing P and L may have certain other abnormal entries which would have gone there. May have. The difference is profit or loss of the year. The difference is profit or loss of the year. So transfer of cost of sales, transfer of cost of sales, costing P and L account debit, cost of sales account, transfer of cost of sales, costing P and L account debit to cost of sales, transfer of sales sales account debit to costing P&L. I'll summarize this once we are done with this. Transfer of sales, sales account debit to costing P&L, transfer of cost of sales, transfer of sales, cost of sales will go to costing P&L, sales will also go to costing P&L, both will go to costing P&L. Assuming we have made profit, recording profit, loss is the opposite entry. If I made profit for the year, if you have made profit for the year, costing P&L account debit, in your P&L you write normally two gross profit or two net profit. So if you have in two net profit, it means you're making profit, other side it is a loss. So costing P&L account debit to, it has to go to capital account, which is also not maintained. We don't have a capital account, which will again go to GL adjustment account. Normally the entry is P&L account debit to capital account. P&L account debit to capital account. It will increase your capital balance. It will increase your capital balance. Here I do not have a capital account. I do not have a capital account. So it will go to GL adjustment account. Clear? I'll quickly now summarize first, and then I give you time to read certain things, and then we see what needs to be done. So let me first summarize what we have done. We started with raw material, where you debit anything which increases raw material value and credit anything which decreases raw material value. Increase and decrease. Increases raw material value and decreases raw material value. Increase raw material value and decrease raw material value. Normal loss is treated as factory overhead. Abnormal loss goes to costing P&L. Then wages control, payment entry in the debit side and transfer entry in the credit side. It will be transferred to WIP control account, transferred to factory overhead control account, and transfer to costing P&L if there is an abnormal idle time. Then direct expense, which will directly go to WIP control, which will directly go to WIP control account. These are the first three segments. This is the first three segments. Then we go to factory overhead, where you pass an incurrence entry, transfer it to WIP control, under absorption or over absorption, take it to costing P&L. We have reached gross works cost. In the WIP control, whatever we have produced, take it to FG control. Whatever we have produced, take it to FG control. Any shortage, excess you have accounted. We have reached cost of networks cost. 5 line items are not there. We have reached cost of production. In the FG control, record your unit sold at cost price. Record your unit sold at cost price. So FG will go down, COGS will be debited or COS will be debited. Reversal if there is a returns. Reversal if there is a return. This is as far as your entries on, as far as the entries on your FG is concerned. Then you have administrative overhead and selling overhead, which is transferred to COS. COS is transferred to your P&L account. COS is transferred to your P&L. Sales is transferred to your P&L, and you may be making a profit or loss, which will be determined by the end of the year. Clear? Any doubts on this? Okay. I'll will take a break at this time. We'll continue at 9:45. So let's take a break now, and then we start solving problems from 9:45.